My name is Alexis Rogers, and I'm the Customer Relationship Lead here at RightCapital. And I want to say thank you so much for joining us for our Friday webinar on managing account distributions. As you know, this is a very key topic to cover, something that we want to make sure we're distributing accounts properly. We're going to go over a lot of different nuances with distributing funds from accounts. Just some additional information about what we're going to be covering today is we're going to be going over, of course, illustrating standard distributions from accounts, whether you're sending money from an IRA to a client and you want to make sure you're capturing that in the financial plan. We're also going to be highlighting how to incorporate some Roth conversions into the financial plan. So if we are considering that situation where we're going to be performing Roth conversions, we're going to show how you can model that as well. We're also going to look at leveraging NUAs, or net unrealized appreciation scenarios. So if we've got those 401ks and the appreciated stock that we want to utilize and leverage the NUA option, we're going to go over the nuances of entering that in the system. And then we're going to be highlighting how to really compare and contrast and build out multiple income scenarios and capture some of those differences. So if you do have different Roth conversion scenarios that we're trying to analyze what might be best for account distributions in general for a client plan, we're going to be highlighting all that information today. So we've got literally a lot of fun topics we're going to be covering. But if you have any questions throughout the presentation, please feel free to navigate to the GoToWebinar control panel and just answer your questions into that questions menu drop down. More than happy to assist, and especially if you do have a specific situation you're looking to model. And so switching gears into RightCapital. Today, we are going to be working on the Halpert family, just to provide some background as to what the Halpert's financial situation looks like today, what their current path is. If we just navigate to the profile blueprint section. So as we can see, they are in their mid-50s. They have 2 children. They have a current net worth of $1.5 million, including their primary home. And they do have some 401ks, some brokerage and bank accounts, and some debts. And they do have some goals in mind. So they're going to be covering the college goals for their children, retiring in 2037 for Pam, and then later on for Jim. And then they do have in their income, savings, and expenses section some decent salary coming in, and we're considering their savings that they're going to be contributing towards their accounts currently, and some current living expenses of $7,000 a month. And so that's just summarizing where the client plan stands today, just to give you a snapshot of what their situation looks like. And we're going to be highlighting how to illustrate account distributions, especially because we have a couple different options for them. But before we dive into account distributions, one of the key things that is important to understand, and probably the second question that would come up when we're looking at account distributions specifically. So if we go to the gear icon in the upper right-hand corner, settings, and then here in methodology, so there is an important assumption that we want to make sure that we have set up to the individual client to how you want to consider RMDs, or required minimum distributions, and distributions. So if we go to the right-hand side of this list, here we'll find the planned distribution method setting. And so just to note too is that when we're in the gear icon settings methodology page, and when we're in this client plan, we are only making changes to this particular client's plan and their assumptions. So this is only going to be for the Halperts. And so this allows for us to have unique settings on the individual client level, especially considering that there are, of course, nuances for each client plan. And so with this plan distribution method that we're going to find over here, this is going to be really relevant for when we are illustrating distributions or planning distributions from accounts, and the clients are going to be achieving RMD age, hopefully, in the future. So if we have somebody that's actively taking RMDs, or we're illustrating them having planned distributions when they are going to be of RMD age, this setting is important to double check to make sure that we have it reflecting how we want to consider both of those things occurring at once. And so from this plan distribution method dropdown, the first option that we have is to illustrate and calculate RMDs added to manual distributions. So what this means is that if we say we are going to be distributing $10,000 from the 401k, when client's 75 on, so maybe for 10 years, they'll have that distribution of $10,000 on top of what is required for their minimum distributions for the year. So this is a way that will apply our plan distributions, and it'll be in addition to any RMDs that are calculated at the same time. We do have a second option here, which is going to be the greater of RMDs and manual distributions. So what this means is that if we indicate that we want to distribute $10,000 a year and the client's RMD might have been $15,000 a year, is that our indicated distribution would go to satisfy that $10,000, and we'd only show $5,000 additional of RMDs. So this is a way to make sure that we are having our RMDs considering what we're doing with distributions, and if we want to either count our plan distributions towards RMDs, or if we want our plan distributions to be on top of anything that is required. The final option from this setting list is to turn off RMD calculations and only utilize manual distributions. So if you wanted to just use plan distributions and you do not want to see RMDs calculated, you do have the option to turn that off. And so I'll keep my settings selected of the RMD added to manual distribution. But like I said, this is something to consider when we are illustrating distributions and the timing of distributions of how you want to consider RMDs in your plan as well. And so now that we've got that key setting down, if we navigate back into the profile section and then into the income section. And so if we want to illustrate distributions from the account, we'd want to click on the Add Income button and then Distributions. With this distribution card, there's a lot of key functionality that you can control with this card. This card is very versatile, but to start with, we're going to model just very simple, straightforward distributions from, let's say, the 401k. A key thing here is that you can title this card so that way you know when looking at it what it's going to be referencing. Let's say I do want to keep it to Jim's 401k distribution, for example. With this card, there's a couple different approaches that we can take for illustrating the distributions. So we can choose to enter this annual dollar amount, but from this approach dropdown, we also have the option to elect a percentage of start year account balance, meaning that if we have this starting this year, we're going to be taking maybe 3% of the start year account balance and distributing that for the time that we specify. You also have the option to indicate that the distribution is going to be a percentage of the annual account balance, meaning we're going to be taking, say, 5% of the account balance each year. Or you have the option to fully deplete an account over a number of years. So let's say we wanted to fully wipe out Jim's 401ks after 5 years. We can illustrate this happening proportionally over 5 years. In this case, we're going to be a little more straightforward. Let's say that we know that we're going to be distributing $10,000 per year. So we're going to manually type into this field $10,000. The key thing here is that you'd want to make sure we're setting the proper owner for the account. So if it's Jim or Pam, meaning the client or co-client, and then you'd indicate from which account. So clicking into this account dropdown, as you can see, there's no shortage to account options, whether it be bank, taxable, annuities, anything like that. For this instance, we're going to keep it selected to 401k accounts. And then you can fully control timing for these distributions as well. So that's one of the key things here, is that we can control timing. We can either specify the calendar start year, or we can have this be tied to their age or a specific life event. For this, let's say that we are having this occur starting next year, and then we can indicate when this is going to be ending. So once again, you can either have it tied to their age, a specific life event, or end after a number of years. So let's say we wanted this to occur for 10 years and then stop. And then another key thing is that you can also indicate if there's going to be any percentage increase to the amount each year. When we are setting a flat dollar amount, we plan on it being a flat dollar amount. We can certainly leave this 0, but let's say we wanted to keep up with inflation, then we can input what we want to see for our annual increase. And then the key thing for what we're trying to model right now is we're going to keep the type to normal distribution. We're going to go over some of the other options shortly, but for now, we're going to keep it selected to normal distribution. And another key thing is that you can also control taxation. So if it's going to be just a normal distribution and it's not going to have any sort of exceptions, that's when we're going to keep the taxation set to standard rule, which means that we're not making any exceptions here. But if there is going to be a situation in which this is going to be a penalty-free distribution, this means that if it was applicable, there would be no penalties applied to this distribution. This is typically used to illustrate things such as sometimes 72T distributions, for example, but it's also if they have any sort of exception that this is going to be penalty-free, you can control that taxation here. On that same note, you can also indicate that this is going to be a tax-free situation as well. So meaning that this distribution will not be taxed if they have some sort of exception that's going on. For them, this is just a standard, typical 401k distribution. So we're going to hit save. And just to show you where we would want to look to see this occurring, we'd want to navigate to the retirement page. And then once we get to retirement, let's go to the cash flows and then summary. And then here in summary, this is a good space to see the year by year breakdown of the cash inflows and the cash outflows for the client's plan across their entire planning horizon. To see what we are illustrating for our plan distribution, we can see it obviously here in the plan distribution fields, but anytime we see something underlined in RightCapital, that means that we can click into it to see more functionality or more information. So let's click into the plan distribution header, 401k, and we're going to see that $10,000 amount that's stopping after a couple of years, as we indicated. And then later on, we're going to see those RMDs kick on. So just so we know when we're looking to see what the RMDs look like, you can also view that here. And so now that we know where to go to kind of verify how that's displaying in the cash flows, there was some other things that we wanted to model and incorporate in the plan as well. So going back into profile, income, and then let's utilize this other distribution card. And so in the case where we want to model something like Roth conversions, this is where this card can be very versatile in its usage. So that key thing that we didn't go over earlier is going to be this type drop down. So within this distribution card, when we click on type, this is going to control what sort of distribution we are illustrating. So from this type drop down, you can indicate whether this is going to be just a standard distribution from the account that we're selecting here, or if we're going to be converting to a Roth IRA, or if we're going to show rollovers to an IRA, or net unrealized appreciation. And so if we wanted to illustrate what we call a manual Roth conversion, let's say that the Halperts are going to be making a Roth conversion, that's part of their current path. That's when we're going to keep the type selected to the convert to Roth IRA. And the key thing here is that you can fully control what is happening with this Roth conversion from this card. So in this situation where we're modeling a Roth conversion and we know that they are going to be converting a specific dollar amount, we can use this approach. But like I said, if they're planning on fully converting an account, you can choose to deplete over a number of years, or if it's going to be a percentage of the account that they're converting each year, you have all of these options to capture those different scenarios here. So let's say we're going to be illustrating them converting a specific dollar amount. Let's say that they're going to be comfortable, that they're planning on converting $15,000 a year. We're going to select the owner. So let's say it's Pam's decision that she's going to be doing the conversions for her account specifically. So we can control that here. And let's say that this is going to be starting at Pam's retirement. And then we can also control the end timing for this conversion. So let's say that this is only going to happen for 5 years. And you can also indicate if there's going to be any increase towards this conversion. Once again, making sure, key thing here is that this versatile tool can be activated as long as you're indicating what type of distribution you want to illustrate. And then you can once again control taxation. So if this is going to be a situation where this is going to be fully tax-free, or have some sort of exception, you do have the option to control that here. Otherwise, it's just going to be the standard rule for taxation. And so let's hit save here. And that's how we can incorporate that Roth conversion. And just for reference of where we can view that occurring, so going back into the retirement module, back into cash flows. And then key thing here is we do have an accounts sub-tab where we can view the ending balance by accounts for each year. So here we can see what's happening with the taxable accounts that we've got, the 401ks, the traditional IRAs, and then the Roth IRAs. But if we wanted to see what is occurring with accounts, so especially when we're illustrating distributions or looking to gauge what is happening with their accounts, that's when we can click on this drop down. And you can view things like additions to accounts, required minimum distributions, withdrawals from accounts, but also net cash flows. And so let's click into withdrawals from accounts. And so here, let's click into the 401k header. And this is where we can see Pam's withdrawal from the 401k. And if we just click on net cash flows, for example, we're going to see that that addition is occurring to the Roth IRA. So we're going to see that conversion happening here. So this is how you can kind of verify how it's displaying and how the accounts are growing each year as well. So especially when we're trying to look at those distributions, this is a nice space to go to check what is happening with the accounts. And so finally, another situation that is relevant for the helpers, going back into the income section, clicking on add income, distributions. And so let's say that Jim has an alternative 401k that he's planning on making and doing a net unrealized appreciation scenario. So let's title this card Jim's NUA. And once again, the important thing for this card is changing this type to what we want to illustrate for the distribution. So let's change this to net unrealized appreciation. When we do so, we're going to see a couple fields populate. But let's say that he has $25,000 that he's looking to model this anyway with. We would want to type into that field manually, that 25,000, but you can also indicate that it's going to be percentage of the account balance, or if we're going to be fully depleting the account in 1 year. But for this instance, we're going to control exactly what's happening here. It's only going to be $25,000 for that one account. And so we're going to keep it to 25,000. We want to ensure we have the correct owner selected for Jim, making sure we're selecting the 401k, of course. And then we're going to indicate when this is going to occur as well. So let's say that this is going to occur in 2030. And then we're going to have it end in 2030. And you can also indicate, if relevant, annual increase, but it's not relevant for the situation. And then the key thing for when we are entering an NUA situation is that you can enter the NUA cost basis. The key here is that that NUA cost basis that you're entering will be taxed as ordinary income, while the gain, meaning the difference between the amount and the cost basis, will be taxed as long-term capital gains. And so let's say in this situation, it's going to be $15,000. And that's going to be what's part of the NUA that we're performing. You can also indicate if it's going to be penalty-free, if there's any sort of exception, but for the situation, it's just standard. And in this situation where not all of the account, if he has another 401k, let's say it's $50,000, typically with anyways, you have to deplete the entire account if you choose to do an anyway. So in this situation where we have leftover balance that's not going to be a part of the anyway, I highly recommend adding another income distribution card to illustrate pulling that additional 50,000 that needs to be just a normal distribution. In this situation, we're going to leave it as is. And so that's how we can enter this as part of the current plan. Once again, the cash flows is going to be a great space to see what is happening with their inflows and their outflows each year if we're having those planned distributions. But when we're doing more conversions, anyways, things like that, that's when we're going to want to go to the accounts tab. And that's where you're going to see fluctuations with pulling from specific accounts. And so let's say now that we've captured their current situation, their current path with their distributions, if we wanted to model an alternate scenario, let's say for focusing on Roth conversions, for example, if we go back into the retirement analysis section, here's where we're going to see that probability success. This is going to be looking at the Monte Carlo simulations, which are those 1,000 trials of market volatility. And it's going to be the percentage of those trials that make it to the end of plan without running out of money. So right now, with everything that we just entered and everything that they have as part of their current path back in profile, that is an 88% probability success. And so here's also where we go to see that the outputs of all of our inputs, but it's also where we go to curate our proposed plan as well. And so if we go down to the action items here, this is where we can start to illustrate different proposals. So with these action items, we can start to propose changes that would be occurring for the proposed plan. Anything that we are changing in the action items is only going to be impacting proposed plans. It will never impact the current plan. Just a little bit of a tidbit there. So as we can see, there's a couple things that are populated as defaults for action items. But if we click on this edit button, this will open up a screen in which we can choose to incorporate additional action items that we want to propose changes to. So let's say we did want to make changes to those distributions. Let's check those off from this list. They're still occurring in the background. They're a part of our current plan, but checking those off just brings those into the action items for us to propose changes to. And so one key thing is that we can click into the titles of these cards to see exactly what the parameters are for our original entry. Just if we need to jog our memory of what we entered previously, we can view this information here. And so let's say we did want to propose that they started to change their path. Let's say for Jim's distribution, we wanted to show them distributing more money. We can type into this field manually that $12,000 that we wanted to illustrate, or we can use the slider to get to that figure as well. So let's say in this situation, we wanted to show distributing more money from the 401k. And let's say we also wanted to illustrate more Roth conversions for Pam's Roth, or for her 401k. So let's say we wanted to illustrate her pushing more into the Roth. We can type into this field and hit the refresh button. And once we hit refresh, we'll see any sort of impacts here. But let's say on top of doing this sort of conversion, we also wanted to illustrate them potentially doing additional distributions or maybe different paths. That is when we're going to click on the edit button and then add new items, income, distribution. And so let's say in this scenario, we wanted to illustrate Pam doing Roth conversions and fully converting her account over a number of years. So let's title this card Full Roth Conversion. Let's change our approach to deplete over a number of years. And so let's say that we wanted this to occur over 15 years. Indicate the owner as Pam. We're going to keep it selected to the 401k accounts. And let's have this start maybe at 2025. And the key thing here is changing the type to convert to Roth IRA. Once again, you can control taxation, but let's hit save here. And so the key thing is that since we are going to be proposing a new path, you can also decide what's going to be happening with the existing one. So let's say, for example, we see that we have our current 401k Roth conversion happening for PM for $20,000. We don't want to double count or overstate anything. So let's zero this out, hit refresh, and then we'll see the impacts to their plan from here. And so we can see that if we did that slight change, it's going to be increasing their probability of success. And so we'll have this nice side-by-side comparison. But another thing that we want to consider when we are looking to compare two situations is that there is some other powerful graphics that can assist in the conversation with comparing our current path versus the plan that we are proposing. This can be found under the Comparisons tab. And so here under Comparisons, it's important to note that this Comparisons tab is going to be pulling from the information we find in the cash flows, which means that this is going to be pulling from the cash flows straight line projection, which means that it's going to be a guaranteed return, and it's not factoring in volatility necessarily. So when we're looking at comparisons versus probability, just to note, these are two different calculations. So it's two different gauge points of financial well-being is how it's typically referred to. But with the comparisons, here is where we're going to find a lot of really powerful conversational pieces and eye-openers when we're illustrating a side-by-side comparison. So looking at our proposed plan versus the current plan, here we can see the difference between their invested assets. They end up with 3.8 million more in this situation. But if we click on this drop down, we can also illustrate the difference between the net worth between the two scenarios. So as we can see, they have 3.8 million higher ending net worth than the current plan if they pursued this path. We can also, very important question when we're looking at Roth conversions and these distributions is, what am I paying in taxes? We can view the comparison here between total taxes paid between our proposed plan and our current plan. So as we can see, our proposed scenario has $314,000 less in total taxes than the current plan. We can also hover over each of the years to see specifically what is paid each year. So if we wanted to look at this year, we can see those differences here. So not too much this year, but then later on, it does make a huge difference in the path that we're taking. Another thing that we can compare is the assets at retirement, where applicable. And so here you're going to find a lot of really powerful visualizations in terms of that gauge point of the financial well-being of the plan. You can see that difference between them and kind of lead that discussion of what is my proposed path going to end you with. So a lot of great conversations can be had there. A lot of questions can be answered here. But let's say, you wanted to see, because I do see that this is a question, let's say you wanted to see more than one proposed plan. So it's a great question. You absolutely can. If you wanted to illustrate a third scenario, you'd want to click on this pencil icon next to current plan. And then you have a couple different options for how you create new scenarios. So you can either click on the add new plan button. And what that does is it is essentially copying our current plan. Or you can choose to copy a proposed plan. So let's say I wanted to continue to build off of my proposed plan and I wanted to illustrate a slightly different path. That is when I'm going to hit the copy button. And then you're going to see proposed plan 1 listed here. If we wanted to retitle this, we'd want to click on the title. And so let's say Roth conversions plus retiring early, for example. Let's hit the save button. Anytime you see the check mark, just make sure you hit it to save the name changes that you're making, and let's hit OK. So when we added that new proposed scenario, we're now going to see a drop down available If we click on the drop down, we can select that Roth conversions plus retire early scenario. When we do so, it's going to be the similar setup as our proposed plan. That's because we copied it, which means that we can continue to build off of it. So in this situation, I want to illustrate Jim retiring early. This is a life goal of his to retire early. And let's say in this situation, he feels comfortable, cutting back on spending if he does retire early. So let's see what it looks like if they spend less and he retires a couple years earlier. And so you can see the impact. And the same thing too, if you wanted to illustrate different situations for the distributions. Let's say he'd revert back to the $10,000. Hit refresh. And you can make those changes here and start to illustrate different proposals. The key thing is that we can illustrate comparing against, say, our proposed plan here. So let's say we wanted to compare the proposed plan of him working until 70 and pursuing the full Roth conversion and $12,000 distribution for Jim versus our scenario of him retiring early and cutting back on the distribution. And you can view this comparisons chart between the two as well. So if you're trying to illustrate multiple proposals and multiple comparisons, you can show this impacts here. And so a key thing when we are looking to compare multiple scenarios, and once we've wrapped up the conversation of this is your current path versus a couple different situations for distributions or income distributions, we can also go back into the cash flows summary, and you can illustrate different cash flows. So if we wanted to isolate our Roth conversions and retiring early situation, we can select that from the drop down and you can view their specific cash flows as well. But once we've covered all of that information, we wanted to summarize it all into a nice PDF report. We want to navigate into the 3 dots report section. And here is where we can start to really fine tune the narrative that we're sharing. But a key thing is that we want to check off this analysis section. But once again, we're going to see that this is underlined, which means we can click into it to see additional functionalities, which means that for this PDF report, you can control what you include or exclude from the narrative you're sharing with the client. So let's say we only wanted to focus on, action items, Monte Carlo analysis, maybe retirement details, we can check that off. But more importantly, when we have multiple proposals and we wanted to incorporate all of those in our PDF report for the analysis, we want to toggle the select plans option, and that'll allow for us to choose what we want to incorporate and incorporate some of those proposals. And hit done. Let's say we want to include profile blueprint and just isolate that information, and then you can download that PDF report. But that's a key thing when we have multiple proposals or maybe 4 or 5 situations going on, you can incorporate all of them into that PDF report.